who are loan officers here at Guild. Chris is going to turn her video on so we know that she's present and accounted for, and make sure that we're all there. She is. We're all here. As I mentioned, and I'll continue to reinforce this through the chat, so make sure your chat box is open and live. Because it is a webinar style presentation, it means that your only communication opportunity is going to be through the chat. So please type your questions in as you go, and then I'll call them out to the presenters to make sure they answer them for you. And we have some a great presentation, and then we have as well, after the fact, we have some documents that Chris is going to share with you and Janice is going to share with you that we can then email to you if you'd like to use them, some Word documents to help you with your customer retention stuff. So we're going to get started. So what I want to do real quick is turn it over to Rick Neal, who is our Guild Mortgage Reverse Mortgage Specialist. Rick's going to do the first part of our presentation, and the rest of us are going to power down and let Rick present to you. So Rick, take it away.
Okay, great. Thanks, Jason, and appreciate the introduction. And hello, everyone. As Jason said, my name is Rick Neal, and I'm a reverse mortgage specialist. In fact, reverse is all I do. So I'm very happy to have the opportunity in discussing reverse with you today and the Home Buying Redesigned presentation, which provokes thoughts for the real estate professional and having another arrow in your quiver when it comes to home buying. So as Jason mentioned, please place any questions you may have in the chat box, and we will get these answered today. If not, you see my contact information on the slide, and I'm more than happy to have further dialogue regarding reverse with you. So today we're going to cover the basics of reverse so you can understand the language that is utilized with reverse mortgages. Also, we will provide some scenarios so you can understand the wisdom or the what's in it for me through not only helping to change lives, which is exactly what a reverse mortgage can do for our senior population, but setting yourself apart from the competition. Then we'll do some Q&A. So remember, use that chat box for any questions. So let's face it, reverse mortgages don't always have the greatest reputation in many people's eyes, and much of this is due to myths that have been passed on, most often by those who don't understand the product. So let's take a look at a few of these myths. So number one, the lender takes my home and title is transferred. Absolutely not. The borrower is always on title and retains full ownership and can sell at any time. The second is only people with financial hardship need a reverse. And this is not just a loan of last resort. Many financial planners are recommending reverse as a sound financial plan. And as an example, a reverse growing line of credit can serve as a cash reserve to tap into as needed, especially in a bear market. Number three, there are restrictions on how I can use the money. This is absolutely false. Reverse mortgage proceeds can be used in multiple of ways. The most common are the paying off of an existing mortgage or other debt, creating a cash reserve, supplementing monthly income, paying home improvements, or covering medical bills, and all tax-free. Number four, you can be removed from your home. Another myth, only if you do not fulfill obligations of paying taxes and insurance can you be foreclosed, just like a conventional mortgage. And number five, I could wind up owing more money than my house is worth and leave my heirs in debt. All reverse mortgages are non-recourse loans, meaning you or your heirs will never owe more than the value of the home in the unlikely event that it goes underwater. And if that's the case, the heirs can purchase the home for 95% of the present value on the home. Okay, let's review the two types of reverse mortgages. Number one, reverse refinance, which is getting a reverse mortgage to stay in one's home that will eliminate debt and create better cash flow. This is the reverse product that is used over 95% of the time where one would like to age in place. And the second is the reverse for purchase, or for someone looking to right size to a new home, whether to downsize or upsize. And it also provides much more buying power for someone. So we will take a look at that. On average, depending upon the age, with the reverse for purchase, borrowers will have to make a one-time or down payment between 45 to 55% with the reverse for purchase. So older borrowers, 70 and up, are able to utilize the lower end of this scale, and those in their early 60s will be at the upper end. And I'll provide some examples a little later. Okay. Typically for most borrowers, knowing the amount of funds they can access is the most important part of a reverse. So the basic factors for determining how much money a borrower can get is called the principal limit, or PL. So number one, they take the age of the youngest borrower or eligible non-borrowing spouse. So the older the youngest borrower or non-borrowing spouse is, the more principal limit a lender will provide. Two is the expected interest rate, which is made up of the 10-year common maturity treasury, CMT swap rate, plus the lender's margin. And then the third component is the max claim amount, the home appraisal, basically, which refers to the lesser of the home's appraised value, or FHA lending limit. Currently, FHA has a national lending limit of $970,800, which I will speak of next. So in the most basic terms, a reverse mortgage is also known as a home equity conversion mortgage, or a HECM. It's a way for the borrower to borrow against the equity in their home. Again, FHA maximum value of $970,800. You can still do a reverse for homes over that value, but it will only be recognized as $970,800 if you choose a HECM. There is what we call portfolio loans or jumbo loans that go much higher than that. But advantages to the HECM is lower rates, among a couple of other items. So as an example, the fixed HECM is around the mid threes, and the portfolio loan product is around 5%. Portfolio loans will lend as high as $4 million. So oftentimes, I tell borrowers who are in that $1 million, 1.1, 1.2, 1.3, 1.4 even, that a HECM, because of the lower interest rates, may be a better choice, but we'll certainly allow them to look at the advantages to each. So when you look at portfolio loans, and if the proceeds are what is most important, oftentimes we will go to those portfolio loans. And again, they go up to a maximum of $4 million. Okay, so next is the age. HECM is for homeowners who are 62 years and older. Some portfolio loans, not all, but some will go down to 55 years of age. And this will help them to convert a portion of their equity trapped in their home into tax-free cash that a borrower can use however they choose. So let's take a look at a few more reverse basics. when it comes to qualifying, the guidelines are the home must be owner occupied and the primary residence. They must have enough equity to pay off existing liens with the reverse PL or principal limit. There is a typical credit and income review, certainly not as stringent as conventional loans. And all reverse borrowers are required to attend independent counseling from a HUD-approved counselor to ensure one understands the reverse mortgage. And by the way, compared to a forward mortgage, a reverse is typically easier to qualify for since FICO scores do not have to be as high. So when we look at properties that a reverse will work for, just about any type of property, single family homes, a condo unit that meets HUD requirements, and even manufactured homes that meet HUD requirements, and new constructions. Okay, now that we've covered the basics of how a HECM works, let's switch gears and look at a refinance scenario that could assist a realtor, and then we'll look at the reverse for purchase. Okay, so first, in a reverse refinance, the clients plan to live in their home for the unforeseeable future. Simply put, they wish to age in place, and this is the most common use of the reverse mortgage, which I mentioned earlier. A reverse refinance unlocks the equity in the home once mandatory obligations and the elimination of the current mortgage and closing costs of the loan. If any funds remain after these mandatory obligations, then proceeds are available in a lump sum, line of credit, monthly payment, or a combination. In essence, a reverse enhances cash flow. So let's take a look at a scenario here. Here we have Mr. and Mrs. Smith. Both are 74 years old. They want to remain in their home, but they'd like to purchase an additional property like a vacation home or rental property. So by using a reverse, the Smiths will be able to borrow against the equity in their existing home, which is owned outright, and use those funds to purchase their additional home. So their home value is $1.5 million, and they qualify for $800,000 after the mandatory obligations. So they find an additional home for $600,000, which means they still have $200,000 remaining in proceeds, and they can utilize those proceeds in those previously mentioned cash options. So bottom line, real estate professionals will earn a commission on the purchase of the new home, in addition to some really happy customers. Okay, let's switch gears now to the reverse for purchase product. In 2008, HUD approved the reverse for purchase program under the Housing and Recovery Act. This allows borrowers to sell their existing home that didn't meet their needs any longer, buy a more suitable home, maintain an equity position, and best of all, no monthly mortgage payments. So potentially 2 commissions for the real estate professional. So there's 2 parts to using a reverse for purchase to buy a home. First, on the left-hand side of this pie chart, a cash down payment towards the sales price from the borrower. Presumably, the funds could come from the sale of their previous home or other sources. And then second, the reverse loan would cover the remaining amount of the purchase price. In essence, this would give the homeowner a strong equity position, greater purchasing power, plus the benefit of not having to make those mortgage payments. And on average, a borrower is going to be required to put down approximately 50% of the new home's sales price. Okay, let's take a look at some basics on the reverse for purchase. These are non-negotiable requirements from reverse lenders. And quite frankly, in today's market, they've been obstacles for many buyers and realtors because of them. The first is 30 to 45 day escrow, which it really should say 45 to 60 plus, particularly if the counseling was not completed. There are no seller credits allowed. Repairs must be completed prior to close. And again, the counseling must be completed. Now, please note, in California, we have a 7-day cooling off period between counseling and being able to take an application. So my number one recommendation, if your buyer is considering a reverse for purchase, is to get them into counseling prior to considering a sales contract on a new home. Okay, next, only one mortgage is allowed on the title. And finally, borrowers must occupy the property within 60 days. So before we conclude this section of the webinar, let's take a look at a reverse for purchase scenario. Here we have Patty and Bob, just retired at 71 years old and want to move near grandkids, plus find a more suitable home for themselves, single story, wide halls, minimal home upkeep, all the popular reasons why seniors look for a new home. Their current mortgage is $200,000. They sell it for $900,000 after commissions, so they have $700,000 in net proceeds from the sale of their previous home. The new home they purchase with a reverse is $800,000. So at their age and interest rate that I'm sure you all are aware of, rates are jumping all over the place, but yesterday just found a 3.31% fixed rate reverse where they would only need to bring in $370,000, and the remainder, or $450,000, would be using the reverse mortgage. So that means they need to bring in a one-time payment of around 46%. Okay, they're able to pocket that remaining $330,000 from their previous home sale and use those proceeds as they wish and never have to make a monthly mortgage payment as long as they meet the obligations that the reverse mortgage lender expects of them, which is paying property taxes, homeowner insurance, HOA, and keep the home in good repair. Again, using the HECM for purchase allows a borrower to pay a fraction of the purchase price, own the home, make no mortgage payments, and pay only property taxes, insurance, and HOA.
So Rick, we don't have a lot of questions in the chat, but I did want to ask you a question, something that I have heard. So you had mentioned it early on in your presentation about financial planners. So everyone on this call, all of our attendees are in the mortgage and real estate space, and all of us have the challenge of prospecting, and financial planners are a viable place for us to prospect too, right? So what do you, my experience with a financial planner and a reverse was very positive. The financial planner loved the idea of the retiree keeping their cash flow very low and continuing to let their investment portfolio grow. What do you hear from financial planners as they get exposed to reverse mortgage?
Well, in the past, and when I'm saying in the past, 10, 15, 20 years ago, home equity was something a financial planner would not want to touch. They would like that to be saved for the last resort for a client. But now, especially when with the presence of a growing line of credit, a financial planner could have their clients use this in a down market so they would not have to use their brokerage account for withdrawals. So again, it's just something that I think for people like me that are approaching financial planners now about using home equity has been very powerful, and it really resonates with them.
Right on. Cool. All right. Well, let's see. I think I might have one more question. Let's see. Oh, here we have a question for you. If parents have children on title as owners, can they still qualify for the program?
They can, absolutely. Yes.
Okay. Great. Cool. Great question. Thank you all for putting that in the chat box. All right. We're going to let Rick drop away. Thank you so much, Rick. We're going to switch gears now and move over to Janice and Carissa. These are two of our seasoned loan officers. Janice up in the San Jose, Willow Glen market, and Carissa lives and works in Gilroy, Morgan Hill. Both of them are trustworthy and wonderful presenters, I promise. So we're going to switch gears now. And for all of you on the call, we're going to now talk a little bit about your prospecting space and how to leverage your existing client and database to help you generate leads. So I'm going to turn it over to Janice and Carissa. Take it away.
Thank you, Jason. Welcome, everyone. Thank you for joining us today and taking a little bit of time out of your day to be with us. We're going to talk about getting customers for life. And what's awesome about this is you have the ability to do that with your database. So the purpose of an annual review is to keep yourself in the minds of your clients at all times. So you want to check in with them. They want to work with people that they know, that they like, and that they trust. So once you work with them and had them buy a home, you want to make sure that you're touching base with them, whether they want to purchase or perhaps they have friends and family that they want, they love them and they want them to work with someone like you that they trust. So the way that you go about doing this is first you send an introductory email, and then you get a call scheduled, make the call. We're going to email out to you a really nice template that has all the questions that you asked, places for notes. So we're going to make it really simple for you. You won't even have to think about what to ask about. Then once you have all the information, get that into your CRM and make sure that you schedule for next year's follow-up. So we're already in 2022, believe it or not. It kind of jumped on us. So we want you to obviously go back to last year's clients and check in with them. Let them know you're doing your annual review. They love to hear from you. They love to know that they're still on your mind and that you still care about them. So then you also go back to 2020 and let them know that you're doing a 2-year review. It's been a tough 2 years for everybody, and it's nice to check in and just see how they're all doing and that they're making it through this crazy world that we live in right now, obviously. Then we want to go back to 19 and even further back. You follow the same pattern, utilizing the script that we're giving you, keep all of the notes, and make sure that you update them on market conditions and let them know what's going on. Hopefully you'll call them right when they were making a plan to make a move, or they have children that are ready to buy. So you just never know what point in time you're going to get a hold of someone. And I can guarantee that if you don't call them, you're not going to know if they're interested in needing, using a realtor again. Go one step deeper and make sure that you have their birthday in your campaign for birthdays. Also have their loan anniversary in your campaign. Make sure you're sending out, that's twice a year in addition to your annual review and follow-up that you're dealing with them. So it's just very important, and you would put in there in your CRM to contact them next year, so that pops up and lets you know. But if they had any inkling of maybe thinking about, selling or buying a second home or an investment property, make sure that you schedule a call with them within the next few months, whatever they said their timeline was. So it's really important to have that in your CRM. That way you just get an alert and it tells you what you need to do. So Guild this year is really focusing on building business with our database. And we also are really focused on working with our realtor partners. We want you to succeed. We want you to do well. So just know that we're always here to help you learn and do better. And now I'm going to turn it over to Krista.
That was great, Janice. So, yeah, this year we really got to stay in front of our people, right? There's so much coming at them. So we want to make sure that we stay in front of them. And the 2022 home buyer, the majority of those home buyers are millennials. They're first-time home buyers. They're educated. They're doing a lot of their research online. You know, all of these social media platforms they're very interested in. So by staying in front of them and creating those connections is how we're going to keep these customers and make new customers for life. So you can kind of see these stats here. They're showing you, you know, where the millennial buyers are, what percentage of those are first-time home buyers. Currently, only 17% of home buyers are millennials. So this year really stands to be the largest number of those millennials that are going to be buying. So keep that in mind. Keeping your audience in mind is going to help you really, you know, leverage how you're going to attract those buyers or those clients. What do millennials want? This will help you. So millennials, they're educated, but they want to know that you know more than them because they're going after someone that is more educated in that field than they are. Who's really going to put the work in for them. And they do rely heavily, like I said, on social media. So reviews online. A great thing would be to push your clients to leave you reviews online because that is where they're going to start their process, their journey is. Who am I going to work with as a realtor? Not only by referrals, but they go online, they find their loan officers, their insurance agents, their realtors online through those reviews. That's going to weigh in heavily. And then, you know, they really want to connect with you. So they want to know that you're not just interested in why they're buying this home or, you know, how much they want to spend on a home. They want to know that you're interested in what their long-term goals are in this home. Are they going to have a family? Who is their family? Where do they see themselves now, but in 5 years? And they, again, are all about technology. So the more helpful technology that you have to kind of help them through this journey is going to be more helpful to you. And then that kind of plays into your CRM, right? You want to make sure that you're using a CRM so that you are retaining these clients and you have a good CRM that helps you with the things that Janice said, like birthdays and all those reminders so that you can really stay in touch with your clients and stay connected to them. So that's the power of your database and CRM. It's going to help you, you know, manage those things. So it's going to help you manage your semi-annual and annual touches to really create customers for life. It's going to, you know, 1 in 7 are going to make a move next year, right? Whether that's a first home, a second home, investment property, an upgrade. So you want to be able to capitalize on that. You want to be that person that's in their mind when they say, you know what, honey, it's time to move. I'm going to call my agent, Tina. And so just staying in front of them with your database to help you. So it's not all here. Your database is doing some of that work. That also opens up the box to more referrals, right? Because if you are working, if you're always on Joe's mind, then Joe is also going to have you on his mind. And so when Joe is meeting with the soccer coach or the neighbor and they mention that they're going to move, Joe is going to say, look, I have a great realtor for you, or I have a great insurance guy, a great, you know, loan officer for you. So that's really the power of the database. And we have used a HomeBot CRM. We use it. It's great. If you guys are interested in it, let us know. We can tell you more about it. I would say the average open rate across all of our loan officers that have HomeBot, they have their CRM in HomeBot is 85%. I will tell you the great thing about HomeBot is that it sends out one digest once a month. It'll have your information on it so that they can reach out to you. It gives them all the details about their home, or if they're searching for a home, it gives them details about the area, tells them how much equity they have in the home, what their home value is, and then it allows them to communicate with you, to ask for a CMA or to talk about, listing, selling, looking at homes and all that good stuff. So if you have any questions about HomeBot, give us a call.
So just to also, with Carissa said about HomeBot, what's great is everybody looks on Zillow, and you don't want to get Zillowed. You don't want them to forget about you because it's been 5 or 6 years and then they just find another agent. So HomeBot, like Carissa said, is great. They get a monthly review, and it really just keeps you right there in the forethought of them when it comes to real estate.
Yeah, it's a great tool. What I'll also show you guys is to go with your annual reviews. We have a really helpful template that we will share with you guys if you want to drop your email in the chat. It starts with this letter that you can send out to your clients, and it'll be in Word format, so you can edit this so that's tailored to, to yourself. You can send this letter out, and then it says that you're going to be scheduling your annual review with them. You would then reach out to your clients, and then here is a great little template so you can write down your notes about your call. Kind of gives you a guide of what to ask, what changes have happened in their family, where's their current mortgage, so you have an idea. If you're doing a net sheet for them or something, how much they owe, and then just a little checklist. So it kind of gives you that template. I know that a lot of us sometimes are apprehensive about calling people. So I think that this is a great tool to get you started. Does anyone have any questions?
I'm just reiterating what Carissa said. If you want those tools emailed to you, then just either drop your email in the chat and I'll copy it, or you can email us directly at getinfo@guildmortgage.net. Getinfo@guildmortgage.net. And we'll all get that email, and you can we'll send you those tools. So big, huge thanks. Let me just double check. It looks like we might have some questions for you. Nope, some thank yous and some well dones, that type of thing. So I'll say thanks to Rick. Rick, we appreciate you giving us and shining some light on our reverse mortgage space. And for Janice and Carissa, thank you guys so much. Reach out as well to your local Guild loan officer if you have any other questions. Otherwise, thanks for joining us on this webinar, and we'll see you next time. Thanks, everyone.
Thank you guys. Have a great day.
Bye-bye.